Hi friends, in this video we are going to discuss capital and revenue expenditure and receipts. Friends, it is very important to be known the difference between capital expenditure and revenue expenditure, capital receipt and revenue receipt. Such differentiation will help a lot in the preparation of proper final accounts. If it becomes difficult to differentiate or to distinguish between capital expenditure and revenue expenditure, capital receipt and revenue receipt, it will become very difficult for the preparation of final accounts. And if at all the final accounts are prepared without knowing the concept of capital and revenue, the final accounts may be subject to manipulation. Friends, the very essence of preparation of final accounts is to reflect the true financial performance of the business concern for a stated period of time, as well as true financial position of the business concern on the specified date. If proper segregation is not made between capital expenditure and revenue expenditure, capital receipt and revenue receipt, final accounts may show a false picture, because of which the financing decisions taken by various stakeholders may put to danger. Friends, there are some considerations in determining capital and revenue expenditure. Number one, nature of business. What is capital expenditure? What is revenue expenditure? It is very difficult to define sometimes. It depends upon the nature of the business. If the furniture is purchased for the purpose of reselling, then it is a good. It is a revenue expenditure. Friends, generally, purchase of furniture is treated as a capital expenditure. Unless otherwise, I know the purpose of purchase of furniture, I may not be able to differentiate whether such purchase of furniture is a revenue expenditure or capital expenditure. If I am buying the furniture for selling purpose, that is a furniture dealer purchases furniture to sell it, then to a furniture dealer, furniture is a good. Suppose the furniture is purchased by the same furniture dealer for office use, for office purpose, then it is a capital expenditure. Then it is very important to know the nature of business, whether such good or asset is bought for this immediate selling purpose or trading purpose or to retention purpose. Number two, recurring nature of expenditure. If the expenditure is of recurring nature, then it is a revenue expenditure. If the expenditure is of non-recurring nature, it is termed as capital expenditure. Friends, this is a normal view. Always I may not apply this view. I repeat, friends, generally or usually all recurring expenses are treated as revenue expenses. Non-recurring expenses are treated as capital expenses. Example, all operating expenses. Friends, what do you mean by operating expenditure? Any expenditure which is required to operate the business, to run the business, is called as an operating expenditure. Example, purchases, wages, freight, salaries, rent, general expenses, office expenses, etc. So they used to reoccur again and again. Such expenses are stated in the trading and or P&L account. If the expenditure nature is of non-recurring nature, example, purchase of land, purchase of building, purchase of furniture, purchase of plant, purchase of machinery, purchase of goodwill. Okay, these are of non-recurring nature. Okay, they are to be treated as capital expenses. So it is very important to be known whether the expenditure is of recurring nature or non-recurring nature. If it is recurring nature, generally it is treated as revenue expenditure. If it is of non-recurring nature, it is treated as capital expenditure. Then purpose of expenses. Then it is very important to know what is the purpose of that expenditure. Friends, if a second-hand machinery is bought and any repairs are incurred immediately towards the purchase of that second-hand machinery, then it is treated as a capital expenditure. A first-hand machinery is bought, it is met with an accident, and some repairs have been incurred towards to make it good condition, then such expenditure is not treated as a capital expenditure. It is treated as revenue expenditure only. Friends, examination point of view also, this is repeatedly asking question, friends, frequently asking question. Repairs. If any repairs are taking place immediately after the purchase of second-hand machinery, it is treated as capital expenditure. If any repairs are incurred towards usual maintenance, or any repairs are incurred towards the damage of a newly purchased equipment, machinery, car, whatever it may be, it is treated as revenue expenditure. Such expenditure cannot be capitalized. Then, effect on revenue generating capacity of the business. Friends, any expenditure which is in the nature of revenue generating to the business in the long run, then it is treated as capital expenditure. Example, a cinema hall with a capacity of 300 seating capacity. Now the management wants to increase the capacity of number of seats to 400. So definitely the occupancy rate will increase, the occupancy ratio will increase, the earning capacity of the cinema hall will increase, the profits will increase. Then such type of expenses are treated as capital expenses, and they are to be capitalized and they are to be shown as an asset. Then materiality of the amount involved. Friends, the concept of materiality is very, very important in drawing of the financial statements. Example, stationery items. Stationery item, many of the stationery items may be lasting more than 1 year. Generally, friends, if any expenditure which gives benefit for more than 1 year, it is treated as capital expenditure. Any benefit which gives us benefit for less than 1 year, it is treated as a revenue expenditure. Many of the stationery items may be lasting or may give benefit for more than 1 year. But applying the concept of materiality, that will be treated as revenue expenditure. Another example I want to quote here, friends. Even 1 rupee is paid to acquire a land, building, patents, copyrights, etc., whatever it may be, then it is treated as capital expenditure. So it is very, very important to be known the materiality of the amount involved. Friends, now let us see the classification of expenditure in detail. Number 1, capital expenditure. Capital expenditure is incurred for getting long-term advantage for the business. Such expenses increases revenue capacity of the business in the long run, and it is not incurred for day-to-day working of the business. Here I'll give some examples with the help of which it will be very clear to digest and understand what is capital expenditure. Number 1, acquisition of an asset. Any expenditure which is incurred towards an acquisition of asset is called as a capital expenditure. Example, purchase of land, purchase of plant, purchase of building, purchase of furniture, any other capital expenses, any other acquisition of the asset, even purchase of the goodwill, purchase of patents, copyrights, etc., 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 treated as capital expenses. I repeat, friends, any expenditure incurred towards the acquisition of towards an acquisition of an asset is treated as a capital expenditure. Then, number 2, improvement of fixed asset. If I am making any improvement to that fixed asset, because of which the revenue capacity of that asset will go up in the long run, and the benefit may be extended beyond 1 year, then such expenses are called as capital expense. Extension of an asset. Friends, if the asset is going to be extended, example to say, there is a building with 2 floors two more floors are going to be constructed. The expenditure which is incurred towards construction of two more floors is treated as capital expenditure. And putting the new asset into working condition. Already we have discussed, friends, all expenses which have been incurred to bring the asset to the present condition and location are to be capitalized. After the purchase of asset, especially second-hand machinery, if any major repairs takes place, if any overhauling expenses take place, such expenses are to be capitalized. And even when the new asset is purchased, installation expenses, commissioning expenses are to be capitalized. Then, expenditure in acquiring the asset. When the asset is acquired, various other expenses may have to be incurred. Example, legal opinion might have to be taken, for which lawyer's fees is to be paid, that is advocate fees is to be paid. When land is bought, building is bought, registration is mandatory, registration expenses are to be incurred. Such expenses are to be capitalized. Friends, I repeat, any expenditure incurred in acquiring the asset is to be capitalized. Then, acquisition of a right to carry on business. If any expenditure is incurred towards right of entitlement to carry or commence the business is to be capitalized. Example, acquisition of patent rights, acquisition of copyrights, etc. Now friends, let us discuss about revenue expenditure, the examples of such revenue expenditure. Number one, expenses for running the business. Friends, already we have discussed that any expenditure which is incurred to operate the business or which is incurred in the day-to-day operations of the business is to be shown as a revenue expenditure. Example, wages, salaries, office expenses, etc. Then next, number two, expenses incurred to maintain the fixed assets. When the assets are in use, various maintenance expenses might have to be incurred. Example, repairs, any maintenance expenses. Such expenses are to be shown as revenue expenses. Then depreciation. Depreciation is a non-cash operating expense. It is to be debited to profit and loss account and it is a revenue expenditure. Then purchase of materials and goods. If any goods are bought for the intention of immediate selling, then such goods are to be treated as revenue expenditure. Friends, now we'll discuss the capital expense and revenue expenditure, taking some examples. Let us see, friends. State with reasons whether the following statements are true or false. Number one, overhaul expenses of second-hand machinery purchased or revenue expenditure. I repeat, friends. Overhaul expenses of second-hand machinery purchased or revenue expenditure. Friends, any expenses which are incurred towards overhauling of second-hand machinery, it is not a revenue expenditure, it is a capital expenditure. And hence the answer is false. I repeat, friends, any overhaul expenses incurred on second-hand machinery are treated as capital expenses, not revenue expenses. Number two, money spent to reduce working expense is a revenue expense. Friends, any expenditure is being incurred to reduce working expense is treated as capital expense. It is not a revenue expense. Example, in a vehicle, a separate instrument may be added for better fuel efficiency, because of which the working expense is going to come down. Or when I am using certain machinery, a new technology may be installed, because of which working expense might come down. So any expenditure is incurred towards reduce of working expense, it is treated as capital expenditure. It is not a revenue expenditure. Then number three, legal fees to acquire property is capital expenditure. As friends, any legal expenses such as registration charges, stamp charges, advocate fees, any other legal expenditure which is to be incurred and which is incurred towards the purchase of or towards the acquisition of the asset is to be treated as capital expenditure. I repeat friends, legal fees incurred towards purchase of property, that is acquisition of property, is a capital expenditure. Then amount spent as lawyers' fees to defend a suit claiming that the firm's factory site belonged to the plaintiff land is a capital expenditure. Already we have discussed friends, any expenditure which is incurred towards the maintenance of the fixed asset is treated as a revenue expenditure. Here already the land is bought and it is a capital expenditure. To defend the suit, if any expenditure is incurred, that comes under the maintenance expenditure and hence it is treated as revenue expenditure. And because of such expenditure, no additional benefit is going to accrue to the asset, and when the no additional benefit is going to accrue to the asset, such expenditure cannot be capitalized. Number 5, amount spent for replacement of worn out part of machine is capital expenditure. Friends, it is little typical to answer this particular type of questions. So if the worn out part of the machine which is replaced, okay, which has significant life, which has significant value, and which can be identified uniquely, and its value can be measured more reliably, then it can be treated as a capital expenditure. Otherwise, any expenditure incurred for the replacement of worn out part of machine is not a capital expenditure, it is a revenue expenditure if such worn out part of the machinery is been replaced as a maintenance expenditure. Then expense incurred on the repairs and whitewashing for the first time and purchase of an old building or revenue expenses. Friends, generally repairs and whitewashing expenses are of revenue nature. Here we need to observe that such expenses have been incurred here towards purchase of an old building. So since old building is bought, whatever the expenses incurred towards repairs and whitewashing may be huge sum, significant sum, and hence such expenses are to be capitalized. They are not revenue expenses. Then expenses in connection with obtaining license for running cinema is capital expenditure. Friends, already we have discussed that any expenditure incurred in acquiring the asset or any expenditure incurred acquisition of a right to carry that business. Here, to carry the business of cinema, license is mandatory. Without license, a cinema business cannot be carried. Since it is a mandatory expenditure, compulsory expenditure, unavoidable expenditure, legal expenditure, such an expenditure is to be capitalized. Friends, I repeat, any expenditure incurred towards obtaining a license for running the cinema or any business is treated as a capital expenditure. It is not only the cinema, friends, any business. Okay, to start any business, if any legal fees is paid, any license fees is paid, such license fees expenditure is to be capitalized and it is to be added to the cost of the asset. Then amount spent for the construction of temporary huts which were necessary for construction of the cinema house and were demolished when the cinema house was ready is capital expenditure. Friends, again here, this expenditure, that is construction of temporary huts which were necessary for the construction of the cinema house and later they were been demolished, and all these expenses which are directly related to the construction of the cinema house. So and hence any expenditure which is directly related to the construction of an activity which is of capital nature will also come under the capital nature, and hence such expenses are treated as capital expenses. Then friends, we'll see some more examples. State with reasons whether the following are capital or revenue expenditure. Number 1, expenses incurred in connection with obtaining a license for starting the factory. Friends, just now we are discussing about license obtained towards the cinema house business operations is a capital expenditure, and hence here the license which is obtained to to start a factory is also treated as a capital expenditure. Then rupees 1000 paid for removal of inventory to a new site. Did I repeat, friends? Rupees 1000 paid for removal of inventory to new site. Just by removing the inventory from one site to another site, no extra benefit is going to accrue or no extra added value is going to take place to the inventory, and hence such expenses are treated as revenue expenses. Friends, I repeat, the expenditure which will give future enduring benefits, at least for more than one year, such expenses are treated as capital expenses, otherwise they are of revenue nature. Number 3, rings and pistons of an engine were changed at a cost of rupees 5000 to get fuel efficiency. Friends, any expenditure which will increase the future potential earning capacity of the business and which will reduce the working expense of the asset is treated as a capital expenditure. Here, rings and pistons of an engine were changed at a cost of rupees 5000 to get better fuel efficiency, because of which the working expense will come down, the operating expense will come down, and definitely it is treated as a capital expenditure. Number 4, money paid to Mahanagar Telephone Nigam Limited MTNL 8000 for installing telephone in the office. Friends, it is a kind of a deposit. If any money is to be paid towards taking a connection, telephone connection, it is not an expenditure, it is a deposit. Such deposits are treated as assets. Friends, generally capital expenses we show them as assets. Capital expenditure means they have some benefit, enduring benefit, say 5 years, 6 years, 10 years, 15 years, 20 years, etc. But here, whatever the deposit has been made to the MTNL towards obtaining the connection of phone, such a deposit is not an expenditure. Okay, its value is not going to come down. Okay, instead its value may increase or its value may become static, where no interest is paid by the MTNL to the depositor or to the customer who wants to have the connection otherwise. Friends, so it is not an expenditure, it is an asset. A factory shed was constructed at a cost of rupees 1 lakh. A sum of rupees 5000 had been incurred in the construction of temporary huts for storing building material. Friends, the main expenditure is a capital expenditure. The connected expenditure is also termed as capital expenditure. Friends, I repeat, the main expenditure is a capital expenditure, and any other expenditure incurred in connection with that main expenditure is treated as capital expenditure. And hence, here, whatever the expense have been incurred in the construction of temporary huts for storing building material is treated as capital expenditure. Friends, what is capital receipt and revenue receipt? Generally, the items we show on the liability side are called as capital receipts. Example, the capital which is contributed by the owner, investors, and any loan raised from the banks is treated as a capital receipt. And if any fixed asset is sold and the proceeds of that fixed asset is also termed as capital receipt. Then what is revenue receipt? Whatever the revenue income is generated or whatever the income is generated in the process of operating the business is called as revenue receipt. Example, sales is a revenue receipt, commission received, interest received, dividend received, these are treated as revenue incomes. Friends, let us discuss more examples to better understand what is capital expenditure, what is revenue expenditure, what is capital receipt, what is revenue receipt. 1. Second-hand furniture worth rupees 9000 was purchased. Repainting of the furniture cost rupees 1000. The furniture was installed by own workman, wages for this being rupees 200. Here, the total capital cost is equal to second-hand furniture worth rupees 9000 plus repainting of the furniture cost rupees 1000 and wages paid to own workman rupees 200. That is total 10,200 is to be capitalized and shown as asset. Friends, it is very clear that any expenditure which is incurred directly, which is traceable towards the acquisition of that particular asset, is to be capitalized, and hence the furniture worth rupees 9000 plus repainting worth rupees 1000 and wages paid to workmen towards installation rupees 200 that equal to rupees 10,200, the entire amount is to be capitalized and shown as an asset on the face of the balance sheet. Then next, number 2, friends, expenses in connection with obtaining a license for running a cinema. Friends, already we have discussed that it is a capital expenditure. Then fire insurance rupees 1000 was paid on 1st October 2019 for 1 year. Friends, here we do follow the financial year as standard year, that is April 1 to March 31st. Here fire insurance rupees 1000 was paid on 1st October. So whatever the fire insurance premium is paid rupees 1000, in that 6 months belongs to current year and the remaining 6 months belongs to next year. And the amount which is belonging to current year is treated as revenue expenditure and to be debited to profit and loss account. And the amount of rupees, the amount which is paid for next 6 months, that is rupees 500, is treated as a prepaid expenditure and is shown as an asset, okay, on the face of the balance sheet. Friends, next, overhauling expenses of rupees 25,000 for the engine of a motor car to get better fuel efficiency. Already we have covered the same example, friends. Okay, any expenditure which is incurred towards overhauling of the engine of a motor car or any other particular, okay, plant and machinery or any other relevant equipment, okay, to get better fuel efficiency, okay, is treated as a capital expenditure. Then inauguration expenses of rupees 25 lakhs incurred on the opening of a new manufacturing unit in an existing business. Friends, this is one of the typical, okay, issues which is very difficult to dealt in with. Okay, inauguration expenses, generally they are of revenue nature. See, there may be an argument that, okay, these expenses are not incurred again and again. Okay, they are incurred, okay, when the business is put to operation, that is inauguration expenses, very first time expenses. This expenditure may not be repeated again and again every year, and hence it is to be capitalized. That notion is not correct, friends, because unless otherwise I am very confident that, and unless otherwise it is reliable that, okay, a reliable estimation can be made that, okay, out of that expenditure benefit is going to accrue beyond 1 year, I cannot treat that expenditure as a capital expenditure. So inauguration expenses may benefit for more than 1 year, but we don't know, okay, after 1 year, okay, for how many more years it may benefit. Even sometimes it is very difficult to say whether inauguration expenses may benefit even for more than 1 year also, since, okay, there is an ambiguity with regard to treatment of that particular item, so it is treated as revenue expenditure. I repeat, friends, any inauguration expenses incurred on the opening of a new manufacturing unit or any other business unit is treated as a revenue expenditure. It is not treated as a capital expenditure. Then compensation of 2.5 crores paid to workers who opted for voluntary retirement. See, friends, this is one of the important example, okay, examination point of which is very, very relevant and important. So generally any compensation which is paid to the workers who are opting for voluntary retirement is of revenue nature and it is treated as a revenue expenditure. At the same time, if the amount size is little huge sum, it can even be deferred, meaning thereby instead of showing the 2.5 crores in the year in which such expenditure has been incurred, it can be spread in between 3 and 5 years, that is, it can be deferred. So if the enterprise wants to treat such retirement compensation expenses as revenue expenditure, it can treat as a revenue expenditure. If it want to defer the same, okay, in between 3 and 5 years, even it can defer, then it will be called as a defer revenue expenditure. Friends, next one more example I want to look into, that is rupees 10,000 spent as traveling expenses of the directors on trips abroad for purchase of capital asset. Here the important term or the line which I need to keep in mind is purchase of capital asset. Purchase of capital asset is a capital expenditure. Any expenditure which is incurred in connection with acquisition of that capital asset, purchase of that capital asset is also come under the bracket of capital expenditure, and hence, and whatever the amount, that is rupees 10,000 spent as traveling expenses of the directors on trips abroad for purchase of capital asset is a capital expenditure. Then amount received from trade receivables during the year. Friends, trade receivables nothing but credit sales. Sales is a revenue receipt. Hence, trade receivables also come under the very bracket of revenue receipt. So amount received from trade receivables is a revenue receipt. The next, amount spent on demolition of building to construct a bigger building on the same site. Friends, this similar example already we have covered. It is a capital expenditure. Insurance, the next friends, insurance claim received on account of machinery damaged by fire. See, friends, the purchase of machinery is a capital expenditure, and if that machinery is sold, the receipt is a capital receipt. Since the machinery is damaged, it cannot be sold, and if at all it is sold, it may not be getting the true value. Since it is insured, an insurance claim is received, that is towards the compensation of sales proceeds. So, if sale of a machinery is a capital receipt, then whatever the insurance claim is received on account of machinery damaged by fire is also treated as capital receipt. Here, one more example I want to quote, friends. If any insurance claim received on account of damage of goods, then it is a revenue receipt. Friends, sale of goods is a revenue receipt. Okay, if those goods are damaged by fire, and if any insurance coverage is being there, and if any insurance claim is received on such damage of goods in fire, then the proceeds which are received from the insurance company treated as revenue receipts. I repeat, friends, insurance claim received on account of machinery damaged fire is a capital receipt. Insurance claim received on account of stock damaged by fire is a revenue receipt. Thank you, friends. Thank you very much.